Wow, what a move, what a day. Boy, oh boy, another great day comes to an end. Hope you guys made some money out there. But it's back to work tonight, right? Tuesday evening. We're getting ready for Wednesday, not just any Wednesday. We got FOMC Fed Day coming at us. The hits just keep on coming this week here, don't they? Lot to cover in a very important video here tonight. We had some more big moves on the charts today. Combine that with some big news tomorrow afternoon, and we have a recipe for some great winning trades tomorrow in our trade room. As always, I'm going to cover all my favorite trades in tonight's video to make sure you have a game plan to make some money on Wednesday. We got a lot we're going to cover tonight. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed the video tonight, do me a favor, will you? Hit that like button. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Wednesday is not going to trade itself. And I'll tell you, I always get excited whenever we see big moves ahead of some big news the following day. So where are the best trades setting up here for tomorrow? And you'll notice right now, boy, what a difference a few hours makes, right? S&P and Nasdaq are, for the most part, bearish into trading ranges. Now, there are two very easy ways to make money with bear markets into trading ranges. If you've watched these videos before, you know there's a lot of ways we can make money with ranges. So we'll definitely cover both the short side and the long side on the S&P and the Nasdaq tonight. We get a lot of great trades. We'll track for this bear market into a range right now. Oil, of course, is bullish. You can see oil here is bullish into a trading range. But you will quickly see tonight, though, it's going to be difficult unless these buyers can hold this pullback right now. I love the short side on the oil. I definitely have some breakouts up around that 77 level we'll talk about here tonight as well. But you'll see tonight on the charts on the oil here tonight, a lot of great shorts, a lot of great reversals setting up here on the crude oil. So bearish into ranges on the E-minis, one of my favorite recipes for winning trades tomorrow. Not to worry, we're going to cover all my favorite trades in both directions here throughout the video here tonight. Before we jump in, though, and get talking about these trades here for tomorrow, let's just make sure we're all on the same page for tomorrow. Tomorrow, of course, is a Wednesday, not just your average Wednesday. We've got the FOMC announcement coming out at 2 o'clock Eastern time. We definitely do have that weekly oil report tomorrow at 10:30 Eastern time, so be aware of that tomorrow if you're trading oil with us tomorrow in the trade room. But the big news for tomorrow is definitely the FOMC announcement. Now, we saw today, right? We saw a very positive, I guess you would call it, CPI number, right? CPI number came out much lower than expectations pretty much across the board. Energy prices, car prices, everything pretty much coming down off those all-time highs. And that kind of soft CPI number that we saw this morning really opens up the door tomorrow for what they're going to say during this FOMC announcement. Now, I think everybody is pretty convinced at this point they're going to raise rates by probably 50 basis points or a half percentage tomorrow. It would be a pretty big shock, I think, if they only raised rates by 0.25%. So I think everybody is kind of expecting that 0.5% rate hike from the FOMC tomorrow. I think the biggest kind of variable for tomorrow will be what will they talk about during their announcement regarding next year's rate hike, because now that we're starting to see what the fifth month-over-month decline in the CPI number, it's now beginning to show more of a downward trend now. And so you've got some people now kind of fantasizing that tomorrow's rate hike could possibly be the last rate hike in the cycle, or at least one of the last. So we might finally be out of this little tightening process here early in the new year. So that is a big variable for tomorrow. The goal for tomorrow is get there early, make your money early, and then grab an early lunch, grab some popcorn, come back and watch the fireworks off the FOMC announcement. I'm not a really big fan of trading the FOMC announcement. I try to get in early, find my trades early before 11:30, 11:45, 12 o'clock, take the afternoon off, and remember, as I always say, save your bullets for the Thursday following following FOMC, because a lot of big professional traders, they're not going to touch that Wednesday afternoon. They'll save their capital and they'll come back and trade what I call Reaction Thursday, which is oftentimes one of the best days of the month to be a trader. And of course, on Thursday, we get some more big news to set things straight on Thursday morning. So that's the game plan for tomorrow. Early in, early out. We'll put together a game plan in tonight's video to make some money early tomorrow. Step aside, let the FOMC announcement come out and make crazy on the charts, and we'll come back on Thursday morning and kick some butt in the marks for that Reaction Thursday. Now, one last thing, don't forget, tonight is my final newsletter of the year. I talked about this last week and of course touched on it again last night. Always a bit bittersweet this time of the year. I'm looking forward to some holiday breaks coming up here, but I will definitely miss you guys on this video newsletter. Don't forget though, tomorrow morning we'll still be there kicking butt in our trade room, 8 o'clock Eastern time. But again, tonight's video newsletter, the final one of the year 2022, will come back bright and early January 3rd once we come in after the new year. Now, back to our charts here right now, because of course the money is made on the charts. We got a lot we're going to cover here tonight. I'm going to go over all my favorite trades on each of these charts here this evening. So make sure you watch all the way to the end, because I try to save the best stuff all the way to the finish. I'm going to go S&P first, NASDAQ, then we'll go over and we'll finish up on the crude oil futures. Over on the E-mini or the S&P or the SPY, real quickly here, first of all of these are tick charts. So first of all, everything tonight will be a tick chart. You can see all the time frames in the upper left-hand corner. And also be aware too, the S&P and the NASDAQ are very, very similar. They're very much interchangeable. So whatever we talk about on the S&P can be applied to the NASDAQ and vice versa. So keep that in mind. Now, where are the best trades for tomorrow on the Emini and the NASDAQ? There are 4 key insights. They're tipping us off to where the best trades will be here for tomorrow. The first one is we still have this overall bear bias right now. Now, I know, we saw that big pop up that we saw this morning off that CPI number, but we talked about this last night. Every time the buyers get these pops, every time the buyers get this on a silver platter, they can't hold it. So until the buyers get a pop and actually hold that pullback, we're still going to lean on this as a bear bias, and that will be the lens that I look at this chart through here this evening. We have a very strong move down for the bears. Anytime we see a strong move in one direction, we're looking for a pullback and a retest of that low. Once we get a retest of that low, buyers can buy it back up with a reversal. Bears will look for a breakout going lower. So you have to think right now, with that strong move going down, you got to think a lot of bears are looking to short the bounces here right now. One of the most important clues we have, though, is that trading range. It's a bear market into a trading range. Anytime I have a bear market into a trading range, there are 2 basic ways to make money with it. One, I want to short the bounces using buyer failures up above the top of that trading range. Or 2, I want to trade breakouts, right? Breakouts, of course, breaking out below it here. Next thing, of course, is also a very important clue, and that is the support trend line. You'll notice we have a series of higher lows on the chart. That support trend line, there's a little bit of a hurdle in now, right? If I want to be a seller on that next pullback, I have to deal with the fact that we have that rising support trend line, but not to worry, I'll show you an easy way to work around that here in this video. So knowing what I'm looking at, knowing what's on my mind here right now, how do we make some money on this information? There are a lot of ways to short this thing as we pull back. The first one is, let's talk about a shallow pullback and a much deeper pullback, right? Because those are kind of the 2 variables that we have to be prepared for. Remember, we don't know what tomorrow will bring. So I want to make sure I go over some of these different scenarios to make sure myself and you have a game plan no matter what the market gives us. We don't want to predict. We want to anticipate different scenarios and be ready to make money however the market goes here. So first thing is, let's talk about a shallow pullback right now. That trend line is the big concern. So as I go higher, I'd like to short the bounce here. but because of that trend line, I need to use what I call a trap entry. Now, traps are very simple. If you've taken my free trading classes, you know how much I love, in this case, a bull trap. And that's going to be how we're going to have to get into this thing as it goes higher. The other way to do it is to get underneath that trend line and then use that trend line as an area of resistance for that short going lower. Remember, that trading range is a magnet. The bears have a very strong move down. They have one thing on their mind. They want to retest that low. As we pop back up, get those buyers trapped in and use their stops as fuel. Get that bull trap and use that to get around that trend line. Then as we go lower and break below the trend line, before we go back and retest the low, watch for an add-on entry off that support trend line as we go. That's the shallow pullback. That is the least desirable scenario here. The much more desirable scenario is getting a much deeper pullback. The deeper pullback, really ideally, right up around the underbelly, right? That kind of deepest part of that CPI pullback that we saw. That would really be kind of the ideal spot there, around that 4,100 and a quarter. We pop up. Now at this point now, if we pop up, we still have that kind of big run up. So we have to assume there probably will be some buyers here who take a few swings at this thing, trying to run this thing higher. Let them try a couple times. Think about where their stops are and sell right into those stops with what I call a two-try failure pattern. Now, there's a lot of variations of this failure. And again, the goal of this entry setup is to sell into those buyers, right? Once the buyers commit a couple times, use their exits, right? Their stops as fuel. A couple variations of this, right? For example, we oftentimes will pop up, the buyers will come in and hold that pullback. They'll retest the high, and same idea here, right? Look for those buyers to come in, let them try once, let them try twice, find those stops. Same failure pattern I talk about in our free trading courses, right? One try for the buyers, two try for the buyers, short right into those stops for that collapse back down into that trading range. And again, hopefully back down to retest the low. One of my favorite kind of reversals on those pops looks like this. We pop up, the buyers come in, they buy the pullback, they retest with that double top. Buyers come in once, buyers come in twice. We have them right where we want them, and we get that short. Then, as we're going lower, we find a new channel. Mark off that low, mark off that high, and see how this sequence goes. This is a money-making sequence on ranges. Remember, bear market into a trading range, let them pop it up, trap those buyers in. Again, this is the same failure pattern we teach in the free trading course. And then I want to grab that first test off the high of that channel. And this could be any of my favorite entry patterns we talk about in the free trading class. Could be a bull trap above prior swing, could be a buyer failure, could be a pullback combination. All the stuff you guys are learning in that free trading course, which reminds me, I know that most of you guys and gals have taken the free classes. You learned these entry tactics, but some of you guys here are here for the first time. If you haven't taken that free class, if you're one of the few folks who haven't learned these entry tactics yet, what I'll do is I'll put a little link up there for you in the upper right-hand corner. Grab that link, take that free trading course on our website, because the strategy that I teach in that free class will show you a stupidly simple trick to know where the winners will be each day, and I'll make it easy to start making money with that by teaching you 4 different entry patterns. If you're missing the best trades right now, if you're sick of taking so many losses, grab that link, take the free course. It's perfect for someone trying to make the jump into full-time trading. And there's a lot of examples of this one. Here's one more. Let's say we pop up and we V-top off that high, right? I would love to pop it up, get the buyers once, buyers twice, and short back down again. What if we don't get that, right? What if the market pops up, we V-top, and we start to roll over from there? Watch that V-top that turns into a grinder. I'm going to mark off that low. I'm going to mark off that high. And then, as always, look left, find those prior swings, and don't miss that short off the top of that channel, right? Does that make sense, right? So it pops up, a lot of bears waiting up here. We don't get the 1, the 2 in that back down, right? It pops up, it V-tops off that high, starts grinding down on it. Again, where's the market want to go? It wants to go back to retest that low. So don't chase it. Don't chase it lower. Draw that trend line off that low, off the high, and then bull trap, buyer failure, pullback combo, right? Lots of examples of those inside of that free trading course. That's how I want to short this thing as it pops, right? As it pops higher here. But you know, there's always potential with these big news days. How would we buy it as it goes higher here, right? How would you buy this market right now? There are, for the most part, there are kind of 3 ways to be a buyer on this. One is to trap in bears below the range. We'll cover that in a moment. The other one, which is probably the most realistic way this market reverses here, and that is a head fake at the low and a strong reversal off of that low. This is a trading range, right? And oftentimes what happens is they'll head fake at that low and they'll rip it right back in the opposite direction. Watch for something like this tomorrow, which could easily happen if they head fake off that low and then punch right back higher. What'll happen is it'll oftentimes punch and begin to grind going higher like that. That grind is the giveaway. That will tell you all the bears over here are walking away, right? That grind. What you do in that scenario is you mark off that high, you mark off that low. Anytime we see a strong move in one direction, we're expecting what? A pullback and a retest of that level. I go out, I find my prior swings, I dig on in, find that trap, right? Get below a prior swing. That's where traps live. Get below the moving average. That's where failures live. And we buy in the stops. We buy those bear traps off that first test off of that channel, right? Makes sense? Now, I would imagine if we do get that reversal into that pop up and grind like that, if we do get that channel like this and we get enough strength going higher, I would imagine that once we get that retest of that high, and of course, I'm simply just drawing this up right now. It could be here, it could be here, it could be here. But be aware though, if we do get that reversal, right, that holds that move going higher, and we can get that long off that low, watch that retest of that high, and then guess what? Look for those buyers to fail again, right? Look for those buyers now coming in once, twice, the same idea, that same double top reversal that we talked about before. One thing you really got to be careful with right now as we go higher, remember, is as we go higher, the stronger that momentum gets. Remember, we're so bearish right now in the short term that in order for us to get this price kind of looking more bullish, we got to go higher. And as we go higher, lots of bears waiting up there. So try to get that 1, 2 back down again. Not easy to find some long trades going higher. Either we have to pop up and begin to grind, telling us the bears have walked away. I think what's most realistic though is that trap off the low and that slingshot coming in back up like that, right? That oftentimes is one of the most common reversals that we get, right? Where they trap low below that range and then it whips off that low into that kind of short squeeze as it goes. And once we have all that momentum there for the bulls, right, we're grabbing that first test off that low. And obviously I'm simply just simplifying it right now, right? That could be a trap, could be a seller failure pattern, could be a bullish pullback pattern. Same thing you guys are learning here in that free trading course, right? So keep that in mind as we go higher or if we jackknife off of that low. Now, the next question is, and we'll cover this, of course, on the NASDAQ, how do we trade breakouts, going lower? The S&P right now, the S&P has a beautiful range down there. And boy, the S&P bears have a great potential right now to get a breakout going lower. Right? So does the NASDAQ. So how do we make money on that? How do we trade this thing as it goes lower? I'm glad you asked. Let's talk about some breakouts here on the NASDAQ. The NASDAQ is very, very similar, of course, to the S&P 500. We have a strong move down into a trading range. Ranges act like magnets. We expect bears, of course, are looking for shorts up around the high, or looking for breakouts going lower. One of the big variables on the NASDAQ right now, again, is that rising support trend line. Why that's important is because if all we get is a shallow pullback, I've got to look for a trap entry to avoid selling into that rising support. or get below it and use that trend line as we go. That's why I like the idea of the bigger pullback, the 1, the 2 back down, right? Or the bigger pullback, the double top, 1, 2 back down, or again, that V top, right? That V and grind going lower and finding that channel right like that. Same basic stuff we talked about there on the S&P. The big question right now is, what if we go lower? As we go lower here, can I buy it as we go lower? Now the S&P has a big range down below us, and so does the Nasdaq, right? You think about this, the Nasdaq probably has one thing on their mind, just like on the S&P. If they can break below this 47, the Nasdaq, range below us is a magnet, range below us is a magnet. If it keeps on breaking down, the bears on the S&P, the bears in the Nasdaq, they're going to want to retest those big lows here. And again, because of that 60-minute bias I mentioned earlier, it seems very likely at this point, unless, of course, something happens here in the meantime. So how do we buy it? How do we sell it? As we go lower here, how do I buy something like this? Very carefully, right? All kidding aside, we got a range above us. Right? So as we go lower here right now, what do you think is the best way to be a buyer? We have to trap in some of these sellers. We're very bearish at this point. We got ranges below us. You got to think there's a big bullseye right on that low to fully give back that entire CPI move as you went here. So trapping the bears, right? Get those bears trying once, get those bears trying twice. And on this one, I really want what I call a crown reversal pattern. A crown reversal is nothing more than 2 tries from the bears and a trap low. And the reason why you want that trap low is because in this scenario, there could easily be a channel coming down here, and you're not going to want to be buying it as it goes higher. Whenever I'm trying to pick a bottom in a bear market like this, right, trying to be a buyer off of that low, I really have to be careful not to buy it as it's going higher. Because again, you're going to see lots of channels coming down overhead, and I want to already be in the money on that trade before the potential bears come in and spoil the fun and run this thing right back down again, right? If you try to buy it as it goes higher, a good rule of thumb is whenever you're trying to pick a bottom in a bear market or pick a top, right, in a bull market, you want to be buying as it goes lower technically and selling as it goes higher. That will protect you against the inevitable, right, as it goes higher, getting some more bears there. So crown reversal pattern, take out that low, bears once, bears twice. And again, this could be the first domino that then triggers that big reversal, right? I think this is the best possible scenario for the buyers tomorrow, personally. Because again, if we just go higher here right now, in order for us to get in a position to be a buyer, we have to get some momentum going, and the more momentum we get going higher, the higher we get. It's a very self-defeating scenario as we go higher to be a buyer. But if we can trap below that low and then get that slingshot running higher, again, this could easily punch right back up, right? We come in. Moving average either holds right off the 21 EMA. They jump with a 1, 2, 3 reversal. We find our new channel there right off the highs. We drill down, find the entry. That's a horrible line right there, Joe. That looks better, right? And grab the first test off of that channel. Right? We call these 1, 2, 3 reversals, right? So 1, 2, 3 reversals. You'll learn a lot more about those in that free trading course that I mentioned earlier before. And again, I want the first test off that channel, right? So bear trap, it could be a seller failure pattern, right? Or a pullback combination. That is a great one. Or again, right? Or again, it's that move lower, it's that trap low, it's that pop and the grind, right? The grind seems to be more likely just because you have already got that big move there. And if it really pops off that low, a lot of these bears will just walk away from it, right? They won't try to fight that strong direction. In that case, off that high, right, off of that low, drill down, find those prior swings, you'll see in the free trading course, I love to find those prior swings. They're just a little bit outside of that channel, in this case, for a bear trap. So I like those reversals off the low. We'll see what happens, right? We'll see what happens. There's also just as much of a chance here that we go lower. The bears get trapped in. We get that crown reversal going higher, but we don't get a full reversal, right? We get a pendulum swing. The amount below, the amount above, right? We may easily run up into these highs up here. And then same thing, right? Same thing now, like I mentioned earlier, we trap in some of these buyers because, again, it's not a bull market at that point. It's a bear market into a trading range. Trap those buyers in, let them try a couple times, and sell right into those stops back down again. Does that make sense, right? So I like that crown reversal, right? I still like the short at resistance above the range. But again, if it's going to pop, it'll pop and keep going, right? It'll pop up and keep on going through that level. That's the reversal that I think makes the most amount of sense, because then a lot of momentum for the bulls, and we're not already up around the highs yet. Because you know what the buyers want, right? The buyers want to go back up and take out that high here. Okay, so keep that in mind as we go lower on the buy side here. And then with the short side, when it comes to breakouts, the breakouts are pretty simple in this scenario. There's a lot of wide open space down here, range below us. You got last week's closing price at 64.25. You know, obviously the FOMC tomorrow afternoon is a big variable. So, you know, tomorrow morning, if we get a breakout here, there's a few breakout patterns I have on my radar right now. One of them being the 2-try breakout. So when you think of a breakout pattern going with the trend, okay, this is really important. So you want to kind of pay attention to this one. If you're looking for a breakout going with the trend, what you want to do is you want to look for traps first and then channels second. Okay, this is kind of an easy way to kind of think about it, right? So what do I mean by that? So again, the key here is you're going with the momentum of the market. This is not a reversal pattern, right? So traps first. So if we see a real strong breakdown, we already have those bears in control. So when I say traps first, right, strong move, shallow pullback, lower low in price, traps, right? That little bull trap is a great trade right there. Because again, you're already going with the momentum of the market. That's what I mean when I say traps first. Now, what happens oftentimes is you'll get that strong move, you'll get that shallow pullback, you'll get that lower low in price, you'll get that trap, and then as we start to go lower now, right, now channels come second. Exactly. Now we go out, we draw trend lines off that low. Now we're getting a little bit further down the line. We don't want to sell as aggressively anymore, and so now we go out, right, and we go find that new channel. We get that pop up. This will almost always go just a little bit above the moving average, right? Which is great because that allows you now to get those buyers coming in. And once those buyers come in, you can sell right into those stop losses. Does that make sense, right? Traps first and then channels second. Right? Look for that bull trap first. We go lower. And then as it starts to grind down, we don't want to sell very low down here, but we do have a nice strong momentum trend right now. So what we do is we find that channel by drawing it backwards, pin up around those highs, and we look for that, deeper pullback, right? That way I can sell a little bit higher. I can sell at resistance. And one thing I always tell you guys is whenever we see a breakout, the breakout leg, okay, the breakout leg is the measuring leg. Okay, so we know where the market wants to go. It wants to go back and take out those big lows, right, that I mentioned before, right, that big bearish objective down there. But an easy way to kind of fine tune your exits on this is think about that breakout leg, right? It's always the first impulse leg, right? So first leg, second leg, and this is third leg. That will really help you fine tune that exit. All right. That's, of course, the general idea of it. Now, maybe all we get is a pop and a grind going lower. That's fine too. Sometimes you may not get that trap, right? Traps first, channel second, but sometimes you don't get that trap. Sometimes all we get is that new channel. And again, we'll go in. And I'm going to keep it simple here right now. I'm not going to go over all the entry patterns right now, right? But again, bull trap, I like to look for traps above prior swings. First leg, right? Third leg. That'll help you really identify where that is. Another very common breakout pattern, we take out that low. The bears don't come in and try twice and fail. No, they don't, right? They take out that low, they hold the pullback, and they jump off that moving average. That's called what? It's called a 1, 2, 3 breakdown. Mark that low, mark that high. You guessed it, right? Look for that first test off the high of that channel, right? First leg, third leg. Okay, you're getting the point now, right? So those are 3 basic breakout patterns. Remember, when you're going with the trend, in a breakout scenario, traps first, channels second. What do you think, by the way? I would love to know what your kind of opinion is on this analysis. What do you think? Is there a possibility they head fake off that low and back up? I'd love to know what you think about this stuff. Give me a holler in the comment section below. I'd love to hear what you guys think about this analysis as well. In the meantime, though, I think we've got a pretty good game plan here on the NASDAQ and the S&P, right? We know how to short this thing as it goes higher. We know how to trade it off the lows and trade the breakouts going lower here. Now all we need is a few more hours in Asia and get back to work tomorrow morning in the trade room. How about some crude oil? Wrapping things up here right now on the oil futures, the Texas T. What do we got going on right now? 3 key insights. First of all, 60-minute bear bias. I'll tell you right now, on a 60-minute chart right now, this looks like a gorgeous place to be a short seller on crude oil. Definitely still have a bear bias right now on the oil. Now, this is a good example where we have a bear bias overall, but clearly it's a bull market right now, right? Clearly, this is not a bear market right now. So short term is bullish, longer term is bearish. Remember, we're going to look at this through the lens of a bear market right now. That's a big part of the analysis on oil. Measured move. Oftentimes, whenever we have a bear market, oftentimes the pullbacks will be symmetrical, right? So a measured move pullback, right? That makes sense, right? A, B, C, D. And if we can line that up with a trap level up here, man, oh man, that could be a great spot for a short. And guess what? Yeah, we're kind of right there. We're kind of right there right now, right? They were right above that high here. There's that measured move pullback. Now, I will say measured moves are not guaranteed to be a reversal, but they're definitely a very good level of resistance. It basically tells us the buyers, oh, and by the way, see this one right here? First leg, second leg, third leg. Remember I said earlier, right? First leg, third leg are symmetrical. If you get into the habit of thinking like that, you'll pick some great tops and bottoms, especially in some range-bound markets. And of course, the next one's a bullish range, right? So the bull range, bullish up into a trading range, that's a big thing, right? That's a big clue. Why? What does a bull range tell us to do right now? What's a bull range tell us? It tells us that buyers would love to buy support below, and they love to buy breakouts going higher. It's the exact opposite of the bearish ranges that we saw on the S&P and the NASDAQ. Okay, so how do we make some money on this right now? Well, first of all, as the market goes higher, you know the bears right now would love to short that thing off the high. Right? That's what bears want. They want to short that thing off the high. The buyers, of course, right? They've got resistance overhead. So the buyers have to get up and hold that pullback, right? Not impossible, right? Not impossible. So what are some ways to trade this as we go higher? Well, we talked about a crown reversal pattern a few moments ago. Right? Remember back in the NASDAQ, we talked about the move lower, bears once, bears twice, that trap low, right? I call it a crown reversal pattern. We just talked about that on the NASDAQ. Well, same thing happens here, right? So now we go up, right? Buyers once, obviously buyers have tried 3 or 4 times here, but think about now where some swing highs are going to be. And think about it, this is a great spot for a trap short. Now, as you guys learn in the free trading course, trap patterns have a very specific signal that you need. It is a more demanding setup, has some rules to follow. So before you go shorting that trap high, make sure you take the free trading class, learn the trap setups, because they do have some very specific rules there. So I like that crown reversal here On the oil, I like even better a pullback, a retest of that high, and then trap in those buyers, right? Trap the buyers in, let them try once, let them try twice, and sell right into those stops. Back down we go. Right? That's a little more reliable because you're retesting that high, you're at resistance, you're trapping in some of the weak hands, some of the more inexperienced traders, and you're using their stops as fuel. I like that one a lot. I also really like, if I can be a little more creative here, I also really like a retest. And again, could be here, could be here, could be anywhere up in this area. I really like the idea of trapping in some buyers one, buyers two. And again, we have that overall bear bias. So this could be that first domino, right? Get those stops getting hit, nice strong signal going lower. This could be that first domino that triggers that move lower, that we then go out, find that channel off that low, channel off the high. Same basic idea we talked about on the S&P and the Nasdaq earlier. So again, lots of ways to make money. Again, bear overall bias is the way I'm looking at this chart right now. Trapping those buyers, use their stops as fuel for the move back down again, and then don't miss that bull trap, that buyer failure, that pullback combination. And again, if that doesn't make any sense to you right now, take that free trading class. It'll all make sense once you kind of learn the techniques we talk about in that video series. All right, so I like those sequences of shorts. Now, how do the buyers get it? Right? The buyers have to pop here, right? They got to pop. And what I said earlier, when it comes to breakouts going with the trend, what is it? Traps first, channels second, right? So strong run up, real strong run higher, right? Something happens overnight, market explodes going higher. Strong move, shallow pullback, higher high in price, traps, baby, right? That trap right there, right? Traps first, right? Traps first, channels second. So strong run higher, shallow pullback, higher high in price, grab that trap, and we run higher, right? There's your bear trap as we go. Now, as we're going higher, now find that channel off that high, find that channel off that low. Does that make sense? Right? So as we're ripping higher here, as we're now ripping higher here, right? I'm going out, I'm finding that channel. At this point now, the trap first. We then wait for that nice deep pullback that will usually get us in just below the 21 EMA. At this point now, the bears will come in, hopefully try to sell short, and we can buy into those stops. For what? For a retest of that high, right? We get that strong run higher. Traps first, right? But once we keep on going, now we're too high to buy. Now we have that deeper pullback. The deeper pullback comes down to that channel. We trap in those bears because, again, remember, very bullish at that point. They want to go back up and retest the high. That's the sequence whenever you're breaking out of a range, going with the trend direction. Right? Now, again, this could easily pop up. We don't keep going. We don't hold. We pop, we fail back down again. So watch that two-try failure off of that high. Or, right? We pop up. We might not rip to these highs. We pop up, take out that high, we pull back, and we blast off that moving average. If that's the case, mark that high, mark that low, find that channel, and don't miss that first test off of that channel low. Again, first leg, third leg, right, are the objectives as we go higher. We had a lot of open space up there, 79.65, 79.02. Those are our key levels as we go higher. But again, remember, it'll be a 1, 2, 3 move. It'll be the first leg, third leg, right? It'll be the first leg, third leg, entry off that channel, first leg, third leg. That'll give you a better exit target as we're going higher. All right, guys. So that's how it goes higher. And remember, like I mentioned earlier, nobody knows what's going to happen tomorrow. So we want to make sure we're ready for everything. Now, as we go lower here, how do I buy this thing right now? That's a tough one. All right, that's a tough one. Again, we're sitting right up around major resistance. We get a measured move, perfect recipe right now for a short. We have a trend line coming down. Okay, that trend line is going to be a big problem, or big variable, I should say, right, for these buyers. What we need to do is get above this trend line, trap in those bears, and back up we go from there. That's the only real way you can really safely buy this thing right now in this area. Again, overall bear bias, right? Show me these bears are trying to short this thing and show me they're failing, right? Once those bears try a couple times, again, get around that trend line. That's key here. Get around that trend line, trap those bears in, and light those stops up for that run going higher. And just like we talked about on the NASDAQ, oftentimes when breakouts fail, they oftentimes will rip and run. Right? They'll run up into that pop and grind, right? They'll run up into that 1-2 blast, right? We've talked about these breakout patterns a few times already. So that's the way that I would want to buy this, knowing that we're in a great spot for a short on the 60-minute chart right now. Now, the move going lower, right? The move going lower is pretty simple, but in this case though, if we do break out going lower, we're now breaking out not going with the short-term momentum. So again, we talked about traps first, right? Channel second. This one's not going to be as easy to get that trap first because we're still pretty much a bull market right now. So how do you try to break out going lower? We have to either get that pop and grind, right, going lower to get momentum on our side. Then we can find that channel off that low, right, off that high, drill down and find that short from there, right? That should be a pretty easy short. Right? It pops down, begins to grind lower. These are pretty self-explanatory, right? Draw that channel off the low. The other one, of course, would be we pop lower or we simply pull back right now, right? Pop lower, pull back, and jump off that moving average. These are called 1, 2, 3 breakouts. We're reversing the trend, 1, 2, 3 reversal. Marking off that low, marking off that high. I love to use channels and I love to use prior swings around those highs, right? Now, where does the market want to go lower if we go lower here right now? If we do go lower here right now, that battle zone down there at 73 is an easy giveaway. Look a little bit bigger on this, and you'll notice we got that monster range down there just begging to get hit tomorrow. That is, what are we at? 5.25 right now, 72. It's only a $3 move, so it's not out of reach by any means. $3 to $4 is a pretty good move for oil these days, down a bit from that $6 to $7 moves we saw at the beginning of the year here. But you can definitely see, right? That's a beautiful trap high up there, around there. The problem we have right now is just the short-term bullishness that we have here right now. So again, do we go up and get that trap high, that 2-try failure, back down? Does that trigger this big reversal? Or do we start popping, grinding down, finding those channels, shorten those pops, right? 1, 2, 3 breakdown and go from there. All right, guys. So that's the game plan. That's the game plan here on the oil here right now. I think we've covered all the bases here at this point. We know where the bears want to go. They want to get back down to those lows. They want to take out that range. And of course, we know where the buyers want to go. They get a job ahead of them though. They have to hold that pullback and keep it going. All right, guys. The game plan is set for tomorrow. No matter what the market throws at us, we have a game plan to make some money. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, the place to be is in our trade room every morning, 8 a.m. We get together. If you're looking for a great place to learn and trade along with me, there's no better place than my trade room. I have the entire system laid out for you, all the software templates, all the entry patterns and worksheets to follow along. I'll put all the free course links to learn the basic strategy. I'll put all the membership links down the description of the YouTube video. If you have any questions or any trouble getting registered as a free course to take the free classes, call the office, send me an email, jump on Skype, use live chat. You can always drop me some questions, of course, comments in the comment section below. All right, guys? So keep in touch. And again, always a bittersweet time of the year. I'm going to miss you guys. If I don't see you guys tomorrow morning in the morning trade room at 8 o'clock Eastern time, have a fantastic, seriously, from the bottom of my heart, have a fantastic holiday, a happy Hanukkah, a Merry Christmas, a happy whatever you guys celebrate out there. Have a happy New Year. We'll come back that Tuesday, January 3rd. They're celebrating celebrating, of course, observing that that New Year's Day on that Monday, January the 2nd. All right, guys, so final video newsletter. I'll tell you, it's been one of the best years to be a trader in my career this year. I'm looking forward to making 2023 even better. Hope you guys enjoyed the video tonight. Hope you use this knowledge to make a killing, not just tomorrow, but every day over the holiday season. And again, you got any questions, keep in touch. I'm always here to help out. I may not be publishing videos the rest of the year this year, but I'll be trading. I'll be here to help out if you need help along the way. All right, guys, as always, be well, be nice to each other. Have a great, great holiday season, and we'll see you guys in the new year. Adios, amigos. Bye-bye for now.